Howard Green. Well, Italian Prime Minister Mario Monti seems to have changed his mind. He told reporters in Tokyo today that the European debt crisis is almost over. These comments came only days after Monti said he was concerned about Spain's finances and warned it wouldn't take much for the crisis to flare up again. But today he says Spain is on the right track and the so-called firewalls against future crises are being fortified. Meanwhile, Italy's borrowing costs are falling again as strong demand is expected at a bond auction tomorrow. So has Europe really solved its debt crisis, or are problems still lurking in the wings? For more, we are joined by Alex Dershevsky, founder and managing partner at Recovery Partners. Good to have you back with us, Alex.
Yeah, thanks, Howard. It's good to be here.
So in this drip-by-drip crisis that we've been following for the last couple of years, now he's saying that the prevention of future crises, that's solidly in place, and that the European crisis is almost over.
Well, Howard, he's talking his own book. I mean, if these people were to say the crisis is still flaring and raging away, I think that would produce the wrong type of market sentiment that he's aiming for.
But sometimes they say, we're not out of the woods yet. They use phrases like that. It's still fragile, the kind of things Flaherty says or Carney says.
His message was nuanced, but at the end of the day, I think he's way overstating the case. At the end of the day, we still believe that the possibility of new black swans coming out of this situation is extremely high, and that not really much has changed. I mean, the liquidity patch that the long-term refinancing operation provided has still not spurred bank lending in Europe. I'd like him to tell the Greeks that are moving into the countryside by the hundreds of thousands that the crisis is over. I'd like to hear him tell the Spaniards, where they've got youth unemployment of 43%, that the crisis is over, or the Portuguese, where it looks like they're going to need a bailout, that the crisis is over. Nothing's over. I mean, we're in a temporary lull now. We've had some respite given this large refinancing operation that was announced, €1 trillion. So we're in a temporary lull now, and the markets have calmed down a little bit, but we're by no means out of the woods.
Shortly before we came on air, there was a note that crossed because the finance ministers are meeting yet again, March 30th, in Copenhagen, I believe, and the agenda for the meeting is whether to raise the bailout fund to 940 billion euros, and it sounds like they've already approved that. So it begs the question, if the crisis is already over, why do you have to raise the bailout fund?
Well, exactly. And, what is the bailout fund really going to accomplish here? You've just got a larger target for the hedge funds to aim at. The bailout fund can only go one way. They can only buy stuff. And, the hedge funds are out there to make money off these folks. And as far as I'm concerned, whether you go to €1 trillion or €2 trillion, it won't matter because the size of the bond market is simply too large. The size.
They can't buy enough bonds.
Well, they can only buy once, right? The hedge funds can short many times. They can put on all kinds of trades. And that leaves the folks running that buyout fund at a huge disadvantage. Huge disadvantage.
So,
in terms of trading against the market.
Okay, so how come Italian yields are now at the lows for the past year?
Well, because the LTRO opened the door for banks to start buying up sovereign debt, and this is how the ECB has effectively generated a QE through the back door. They've not necessarily bought these bonds themselves, but they're repoing the bonds and providing the funding to the banks to do so. So that's produced a very strong rally. In addition, you had a swing around in market sentiment once that LTRO was announced, so everybody jumped on put on their buying hats. Now, the hedgies weren't shorting into this. The hedgies were buying as well. So you've had a run-up in price, a run-down in yield, and that could very easily be reversed over the next month or two if sentiment changes.
Seems fair to suggest that a lot of people have made a lot of money on some of those Italian bonds.
Well, absolutely. I mean, as I say, this is just a profit target for these guys. It's an easy hit.
So, what about that LTRO, which was refreshed recently? I think it was the FT today, the Financial Times, had an article talking about how this is creating possibly zombie banks in Europe.
Well, absolutely, because what you've done is you haven't solved any of the problems. This is why I say the possibility of black swans is now even higher, because what you've done with that LTRO is provided liquidity, but you haven't solved the problem of asset quality at those banks. So now it looks like all the banks are okay. Well, they've got a liquidity patch. They're not okay. Their asset quality is, in many cases, still poor and hasn't been addressed. And that means that the whole system, systemic risk, is now a function of the weakest bank's balance sheet as opposed to the strongest bank's balance sheet. And we don't know where those problems really are because they haven't been systematically addressed by the regulator or the ECB.
So you described earlier the current scene as a bit of a lull. How long does this lull last?
Gee, I don't have that kind of a crystal ball. It could last quite some time. It could last several months. You do have a heavy refinancing calendar as we get into the summer with a lot of these sovereigns. And I think the market's going to be tested again once a lot of the sovereigns have to go to market to do the refinancing and their financings for deficit funding purposes. And that funding calendar is extremely high as we get into the back end of this year and into 2013. Italy has to roll over, this year about 500 billion euro of bonds. It's
500 billion?
Yeah.
What about Spain? Because we have our budget here tomorrow, but they have theirs on Friday. What can you possibly say if you're Spain's finance minister with 43% youth unemployment and a general unemployment rate of 23%?
Yeah, well, this is a problem. This is a problem for these democratically elected governments. They have to try and stay in power, and they can't stay in power by continually preaching austerity. The Spanish have already missed their budget target, and they've told the EC, they're going to miss it by about 1% relative to what they agreed earlier with the EU, and they're in a bit of a doghouse already. Let's see what they announce at the end of the week.
So just about a minute left. Just back to Monti and the comments that we kicked off with last weekend. He warned that it wouldn't take much for Spain to light the fuse on the whole thing again. Yet today, he's saying what he's saying, that it's almost over. So how do you go from that comment on the weekend to this comment now?
Oh, I think he was consulting with his spin doctors, with his PR advisors, and he was told to shut his mouth as far as any potential new flare-up is concerned, and to turn the conversation to a positive type of a tone. I don't think these guys want to tip this thing the wrong way at this point because it's still delicately balanced. And as I say, the potential for a black swan event coming out of this is extremely high right now. It hasn't been solved at all.
We got to leave it there. Thanks for coming by.
Thank you very much, Howard.
Thank you. That's Alex Jershevsky of Recovery.